Greetings from Suriname. I'm greeting all the subscribers and those that are tuned to this channel to experience this journey with us. Us meaning me and the algorithm that I am programming now with backtesting, journaling, and tape reading experiences. I hope that when the dust settles, that I will be able to use this algorithm, the mindset of an algorithm to trade successfully the market. I'm greeting you from Suriname, and once more, I have the disclaimer before you, asking you to pay attention um, for trading markets. Thus is speculation, and speculation does involve a portion, a risk with it. It is sound for you to first know what you are doing in the market, and then based on your understanding, if you so choose to advise to seek advice first from your counselor, from your advisor, and then to take risk in the market. This go to the channel. I'm welcoming those that have subscribed lately. Welcome. Yesterday we had a daily review, and the review, the logic for my trade today. And I think in preparation to this daily review, I went to check the chart, and I think that we were on spot, and it is great. I think from the 22-minute market to the 37-minute market, we lay down exactly what this day would have given us on trade projection, and we and we have it. It is a great feeling. Doing this for entertainment purpose, but also as I'm programming the algorithm, it is a great thing to constantly and actually with great consistency see that my analysis, my review and analysis is painting exactly as I predict them. That gives a great comfort to continue doing this. We will see and experience growth in time. That is because we are building this channel to be a resource for every trader that want to approach the market with ICT concept. We are trading with algorithmic principles, believing that the markets are controlled, highly manipulated, and being run by an algorithm. AI is running the show, and we are focusing to become good at tape reading, as we know that before trading good algorithm, you need to first master tape reading. That's why we are doing these daily review, high time analysis, sometime executions on demo tape reading on paper trading account. That's why we are doing all this. I'm now going to the chart. And this is the Nasdaq chart. What we have done is that this is the Nasdaq chart. I want to see it from the 5-minute on, because this is where we stopped yesterday. Okay, nice. Before we go to the chart, it is good to check the calendar. Normally when I drop from weekly down to the daily time frame, Then I go to the calendar, but it is good for us to go to the calendar first. The reason for that is that with the analysis of yesterday, this daily review and analysis, the logic for my trades today, um, this review, we attempt to also predict and forecast the delivery of Wednesday and Thursday. Now, the reason why we try to include in our narrative, in our logic, this day is because of the nature, the characteristic of these news driver. They are highly manipulated news driver, or news driver that can be used as smokescreen for the market makers to come in and do manual intervention, both CPI number and FOMC. All these news driver tomorrow is really a what we can call a landmines day. For less experienced and new trader, it is recommended not to engage the market tomorrow. Leave the market till after 10 Thursday 10:30. After 10:30 Thursday, an hour after PPI, then one can engage from 10:30 till Friday. It will be then a nice market to see where they have left liquidity and inefficiency to make balance with these numbers. Those that are experienced will, or some the uninformed trader will try to trade this day. If you will do so, please do not trade ahead of these numbers. It is also the time that, because of the volatility, the brokers like to increase the margins, and the gain that one imaginary expect to have with these big and large range days that come by way of these number being injected into the market, these events, is not that significant. It is better for you to trade. If you are advanced and you want to trade tomorrow, as we are now checking and we are now looking at trading day of the week, you may, but engage the market only after 10:30, after the CPI number hit the market. Be careful that because of 3 o'clock federal fund rate FOMC news, that they may use the PM session to prime the market to be choppy, or to be seek and destroy, or either to be very quiet because big money have pulled of will have already, or will be having their fund pull out of these strong and large huge news driver, which are prone to be used for manual intervention. You can trade it, but then do that after the news hit, and then you go in and trade it. Do not trade ahead of this news. It is better for just to take a day off tomorrow. The market will be here tomorrow, the day after tomorrow, next week, and so forth. So do not link your equity, do not link your account to one trading day and try to make all at one day. Leave this day, trade after 10:30 Thursday, and see what you can do for the week. We are going now to the chart. The reason why I've just covered the trading day of the week is because of the fact that yesterday in the analysis, we tried to bring in the impact that those news drivers will have on the trading day in our analysis, and we have seen much what we have tried to predict. What we will do is we'll go from the higher time frame, we'll go back to the daily, and then check from there downward. But we have seen a very nice move, nice runs that we have forecasted, and if we were in the trade, if we had trade this day, we would have gained and experienced wonderful price action delivery. Going to the 15 minute. The 50 minute, we have seen price have really traded aggressively bullish and engage these low. We had expected some more. When we reach a 4H, we'll talk about what we have expected and what we had received instead. The 60 minute, you continue to see we are going from the 5 to the 1 hour to the 1 daily, and from the daily down we will analyze to the 5 minute. If we had taken some trade, or even if not, as tape reader for our journal, old time journal way, not old time journal, the way we normal journal, is that we would be saying, I'm glad that I am able to see that the market has traded exactly as I wanted it to trade. I have expected price to drop first to the sell side, and it has traded and engaged the sell side liquidity, but close above the current new week opening gap. From that current new week opening gap, we've seen price use an order block that we have marked yesterday, and price use it to trade aggressively to the buy side, engaging the liquidity that we have predetermined. That is old way in writing, not old way, writing and backtesting. That is what I would be writing on these empty spaces. For the channel, I am doing now audio review and audio analysis. That's why I don't make too much note. I hope you can follow me and then be able to use this information wisely. This is a 4H. You're seeing that we have a nice run to the upside to create for the year. This is what we also want to go to the daily. Good. That is the daily chart. Indeed, we have seen a retracement into this daily SEBI. This one. This retracement into this daily SEBI, which we call institutional order flow entry drill, and we see the market from the daily perspective rally and expand to the buy side, using this as now an order block. We've seen price trade further toward the buy side. You see the week. For initially our weekly projection was that we would like to see price trade to the buy side but close down. Our weekly prediction was that we wanted to see price drop and trade to the sell side after it engaged the buy side some more. Now we see a strong, but it is the Thursday. We still have days, and there are a lot of news event that can help, that can lend their self for a aggressive trade down to the sell side. The time of the year, the seasonal tendency. The mentor has access to go and research that and try to find out what best seasonal tendency we can use, and the one he recommend is that one of more research. It is a website where he is. More research. Welcome to more research, and it is where we find seasonal tendency, future trading. This is, I think, where he made available some data and something that we can see. This is, we have just tip silver, and he continued to make available charts. You do your research, and then you can know what a seasonal tendency is. If we look at the monthly chart, now we are starting with the analysis. We are seeing that the monthly chart had here a bearish order block and have been seeing since. Annotation on the monthly chart, I am using the color red to make annotation on the monthly chart. It's a bearish order block, because this is what we will be doing. This is what the algorithm is doing. It is price delivery continuum. It is called price delivery continuum. It is going from higher time frame to lower time frame, from lower time frame to higher time frame, seeking inefficiency, seeking where graded levels of tails and wicks are, seeking buy side liquidity where the market have left liquidity, and so forth. We have seen that last year from the month November, we have seen steady bullish rally, and April we see a down close candle, and May, now we are in June, we are seeing, so far we are looking at a bullish up close candle. We are not choosing top and bottom. We are in a USA election year, and most likely the market makers, the Federal Reserve or Fed, is using using the election and all that is around it, all that is happening in mainland USA, all that is happening in the Middle East and some other parts of the world on geopolitical front. They are using those events to influence and cause the market to continue to rally. For normal, by mid-April till about mid-June, we seasonally, it is a tendency that we normally expect a small decline to create a certain summertime range bound trading, and then decline to a low in the fall to rally for the December time period. But now from January, November, December, January, February, March, we have seen price steadily running to the buy side. It is good to make note that the market has been created with these runs, higher highs and 1 week, and the market created higher highs. We're just waiting we will be trading in that directional bias. We won't try to take any short here. We won't try to trade in short, but we will use and we will rely on what the market makers are doing, and we will be looking for to trade in the direction in sync with the market makers. That is what I wanted to point out. I'm now on the weekly chart, seeing now here an order block. Price may drop to it again, trade down to this order block, trade higher. Price may, we are now on the this order block, this till there. This is the main threshold. We are seeing here the main threshold. We want to see also how price will trade to the if price trade and start going lower. We want to see how price will close and trade to or through, and what it will do around this main threshold. For if it closes below this main threshold, it will give us an indication that we are going bearishly. For now, we are looking at price to continue going higher. Price may drop to this bearish order block, using it to continue to go higher. And if price trade and go lower than this order block opening price of this down close candle, we will be looking at the main threshold, how it will react at the main threshold, and further see and look at price delivery at these levels. We have the 25% somewhere here also, and how price will trade at these levels. We will be here watching it. There is also another block right here. Instead of another block here. So we'll be looking. This is from the weekly perspective, the directional bias. For now, we are not choosing top and bottom. We are looking for price to continue. We will be looking from the weekly perspective. We are in the middle of the week tomorrow. We will be looking for up bullish price delivery. However, because of this order block, this has validated this order block, we may see price first drop to this bullish order block, trade to this main threshold, and close above it, indicating it will continue to rally high toward the bullish side. But if price trade to and close below the main threshold of this order block, we will be looking for short opportunities using this graded level, and then trying to reach for sell side objective like this BC that is below the swing low. That is what we have for now, the weekly prediction. We are now to the daily chart, and this day we have seen a strong up close candle. The market has indeed traded just as we predicted it yesterday. We wanted to see price drop lower. We have marked this, I think it is this order block, its main threshold. We marked it somewhere, I think on the 4 hour we can see it better, and we didn't want it to trade lower than the main threshold. It did wick lower, telling us it is going up with this movement and close to the buy side. I can say that from what we are now looking at here, we see these two down close candle with a long tail. This tail consequential encouragement. Price has straight past it but close above it. That is the sign, the indication, the signature that we have that price is most likely going to go up. We see price open and trade low and trade and close like the consequential growth just trade past this mean torsion and again snapped higher and is projecting lower. We are looking at a very strong week, a week that has the potential with the news driver from tomorrow and Thursday, the news driver to send price again to make balance this buy side delivery, to offer sell side delivery, even to drop to this order block and then trade further. What we may see, because it is the 11th of June, leaving us 3 days before we reach mid-June, we may be seeing price trading in a range, a large range trading, creating liquidity, trading toward it, creating liquidity. If that is not the case, for now, it seems that price is going to continue going higher. Dropping to the buy side will be suspect, and then go higher. I am on the daily chart. We do the prediction for tomorrow. Price have already opened, and we are looking at something that is giving us some insight. This gap on the daily chart, price open, is jumped open. Sometimes it is referred to like a vacuum gap in the algorithmic language that we have learned and we have been educated in by Mr. Huddleston ICT. It is referred to as, I think, a vacuum gap. It is a balanced price range if it stay like that, but it's sometimes referred to as a extortion gap, like the move to the upside is they are tired, and a last jump create this extortion gap. I want to see what will happen. For now, this high have already been taken. Price open, trade to this already be taken. I am expecting price with the volatility of tomorrow to trade toward the sell side, closing first this imbalance, this buy side delivery side only, giving us a sell side delivery. So better, let me see what the range of opportunity may be. About 118 handle price. I'm expecting price to drop toward even this. If I put this, even to this order block. If it continue to go further, I will be looking at the mean threshold of this order block, this daily order block. I will be looking at it and see how, what price will give us. What we normally do is that for every tail that is long compared to the body, it is long. Let me try to compare. This 136. Compared to the body, this is relatively not too long width, but it is significant, a significant width that we need to consider if price is dropping down. we need to consider its consequential encouragement, and its consequential encouragement may well match with the mean threshold of these two consecutive, yes, uh, down close candle, which form the one bearish order block. We will be watching this tail, and what influence, what we can use it for, what the market will use it for. So for the conclusion of this daily analysis, we are looking at the market to continue to go higher, because we are not trying to choose top of movement, but before it rally higher, we are looking for the market to trade lower to make balance this imbalance. Now so only sell buy side have been offered here. We want to see the market make it efficient, and then trade to this order block, and then again trade to engage a buy side. If it trade past it, we will be looking at this week consequential encouragement, this order block mean threshold, and if price close below the order block mean threshold, we will be looking at sell side objective for price to trade to and engage. On the daily chart, we still have this part of this inefficiency to make a balance, so there is room to see sell side delivery. We are in the time of the year that we might see some, that actually we are expecting to see some decline in prices. The price is now rallying, is not how it normally should be. We are expecting seasonally declining to the summer, like range bound trading, and then the seasonal low to followed by the rally. It has been manipulated, taking account the USA election and another geopolitical events in the world. Go to the 4H. The 4H is telling us that we have an order block right here and a imbalance. I think we have to imbalance, which is an imbalance, a fair value gap, an imbalance on a green candle. We call it buy side imbalance, sell side inefficiency. We need sell side need to offer sell side to this side of this market. Have to offer still sell on this to make this run balance. So there is room to expect that price, even though we are looking at price to continue going higher, not to try to choose top and bottom, so price may decline and drop toward the sell side, this to make even this balance, to drop to make this balance, give us maybe an institutional order flow entry there. If it leave a portion open, it will tell us that it is a strong movement higher, seeing it as a breakaway gap. It all depends what they will do tomorrow with the big day. I will not be trading that day. I will be sitting at a sideline. For now, the market is making higher highs, and I'll be sitting at a sideline, looking at what the market will give us, tape reading it, and if the market give me a suit reason to trade, I will trade, but and I will trade only after CPI after 10:30, 10:30 till lunch hour, about still a bit in lunch hour. After that, I will not engage the market all, because of the potential priming the market for the FOMC data. That's why I will not be trading the market. I will take this one off the chart. It has been traded to and make balance. And this one can be cleared to this. This one is trade through it, come above it, has been used indeed, but has been made balance also. You can take it off. What we have expected yesterday is that we wanted to see price when we were here. I think we were here yesterday. We wanted to see price drop to the middle of this wick and then start rallying up. And the delivery have seen price drop way down to this. I think it is even past yesterday opening range gap. Price trade to this order block and close above this current new week opening up and rally strong with a strong bullish rally. I want to see how long this candle is. About 90, 102 handle. It has rally up, drop about 10 o'clock, drop, and then trade using this CBS inversion fair value gap. Trade leave us again a 60-minute CB that is here. This CB in line with this order block is those that have follow model 22 is how you define a true order block. A true order block must have a imbalance with it. We are also seeing some imbalance here, and these are all 60-minute imbalance. Further, we don't have no imbalance there. 60-minute imbalance that can be traded to make them efficient, to make them balance tomorrow. Tomorrow is a big day. We are expecting price to drop. This is to drop. Actually, this is where we minimum accept price to reach to. This daily order block blue, and depend on how price trade on the main threshold of this order block. We'll be looking for down close prices. Now for now we are looking at price to continue going up, seeing this familiar pattern. Price continue going up, violate him and close below it, and it will continue to go up to take this high or trade to this consequential encouragement, and then I am expecting it to drop and trade lower. Now this retracement have not taken any swing low, but then to create an own swing low. So I will have them here. Swing low, sell side liquidity is below it. How we will trade it, how price will deal with it is something that we'll be looking at tomorrow. Swing high and above swing high we have buy side liquidity in two form. We have those that are selling, have set above here their protective stop loss, and those that are believing in breakout trading have set their buy stops order right here. So to form our liquidity, we have there the same with the swing low and sell side liquidity. Two forms of liquidity we have here, and we are looking at these consequential encouragement when the wick is just a normal wick, a wick that is long but that not too long. We're just focusing on the consequential encouragement of that wick, for they are being seen as gap to a real buy side delivery gap is here. We are seeing also a bullish order block with a fair value gap abyss. So there are a lot of downside objective that can be traded to. Price may rally first to our spike wick to this swing high, and then drop and trade lower to the sell side, focusing on it to see how it will react from here to there, from here, from the order block, or will drop way down to the main threshold of this daily order block, and how it will close it will tell us that the market will begin to seek sell side objective. If not, we will be focusing on price to continue rally after it drop to these inefficiency. It was a nice trading day for those that have engaged the market. I have not traded this day. I put a trade on my personal. Let's go to the 50-minute and I'll show you what I did. But I was away. I took that trade on a restaurant and I was not comfortable with it, and close it. I closed it in profit, and I closed in profit, but I was not content with how I execute, because if you cannot be after the chart to read what the market will do, it is better not to take trade and not to force yourself to take trade. Don't try to trade on an airplane. Don't try to trade on your phone. Not enough landscape to see what they are doing with price delivery. So it is better for you to relax, take the day off. In this case, I needed to go to do certain things. Okay. What have we here on the 15-minute chart? We are seeing also here we have an order block. Clear this one first. We have an order block. This order block has been used. Trade open, trade pass it, use and trade higher. Before the order block, it is better to look at the London session. Normal, this is where I conduct and do my study. I will be marking it like this. There, one. Seeing the market leaving these inefficiency to trade to indicate that they will return to it in a later time of the day. This is SEBI. So this is what from 7 o'clock, what you are looking back at. You're looking to these inefficiencies that have not been engaged to. Instead, they leave us a swing low, a 15-minute swing low, above which is two form of liquidity. Buy side liquidity, top, and then also a Also we have above that one a busy. We have also a 15-minute swing high right here, or you can call it relative equal high. The reason why there is also another high there above which is relative also to form of buy side liquidity. We see price open normal and rally break out to first take this swing high, take that swing high, leave this swing high, but did not continue. Prior to London Open, it was in this rallying already to London Open. This is the familiar pattern we like to see in price delivery, and if we see it, we just open, take the we see this close, open, get in this short down, enjoy the rally. It's a familiar pattern, one that I am accustomed with, one that I'm using very well in trading and enjoying nice runs. Price take these high, leave the 60-minute swing high. Now it's a 60-minute swing high clear, and also this swing high is left clear. Price trade down. This is normally a London session. We saw this would have been for us the entry for silver bullet down to this internal range liquidity, down to this sell side. It did engage it, trade lower, create the London. This is the London low. All these things, I think I marked them best below on the 5-minute chart. The London low. They work the London, the pre-market open, another low has been created. The pre-market open below which is sells at market opening New York session. They have trade through it, creating another low at this high. That has the lows are continue being taken while the highs are left untouched, which is significant for us. This high has not been taken, this high has not been taken, this high taken here, but this is left, creating just more liquidity out here. The market open, trade to this trade low, trade and engage these relative equal highs, but have still left these highs to trade it to, and then drop lower. This drop I did not expect it. I wanted to see it stop at this, but it is turtle soup. When it closed, below, we trade to this. When this one closed, we could have buy there. Those that are trading order block, we could have buy there. It would be a bullish order block. Actually, it is from here. You can lift this to this opening price right there. This order block is one consecutive order block. It is the 60-minute order block. You buy it there and enjoy the rally till this would have been first take profit, a retracement to this inefficiency, a second inefficiency. What we normally say is that when it is is model 22 sell side have been taken, displacement to take the swing low, a drop if there is if there are two fair value gap, you can enter this one, but allow for price to drop to this, the second fair value gap, and then see price right higher. This is also what one can see, that can be seen as OTE. Only it have not reached. If I measure it from the body, it is a perfect optimal trade entry if it is measured from the body. I don't use the OTA as that much, but this rally has shown us beautiful run, and we are now seeing this decline. We'll go to the 5-minute chart. What can we expect tomorrow from our analysis, which is what we trust? This is a balanced price range. Trader has been caught going short, and they very quickly rebalance higher. Is a balanced price range. I use it also when it has closed. It has closed, it is balanced, this one and this one. When it open, if it had trade to it, I could have used and trade up further. I have taken a quick trade. That is this trade. I saw this price open right at the opening, this drop and trade to this you call this 60 minutes, the 60-minute SIBI. I closed the trade. I was really not comfortable with the trade, and indeed later I have seen that we would have seen a repricing down, trapped trader going lower, those that could not wait, and then see them trade this beautiful run up. We've seen the lunch hour from here 11 give us a nice run. The lunch macro, you've seen a drop to take a 15-minute low. It did not drop close to this, and then lunch hour gave us a rally, which they continue to do on the PM session. I have not taken any trade, but let me see. I think I have taken a trade right here. I was not satisfied with the location where I was. I was on my phone. I was watching and was out of my office, not comfortable. And for now, looking in retrospect, I'm happy that I came out of the trade, and that I have not been trapped into this false decline, because I think from the higher time frame I had expected a run. From the analysis from yesterday, I have expected a run, but not that strong. So this trap, I've escaped it, all because I've just come out of the trade and take my bite, and have further allowed the market to trade and do its thing. Tomorrow will be a nice day to see, to watch, to hunt, to stalk, to see if we will experience a reversal or will continue going higher. It is a high impact news driver. It is prone. They can use these news drivers to manipulate strongly the market. It is not recommended if you are, if you are a less experienced trader, please wait after the PM session. If you can, just go and trade demo on another account. Wait after the, how you call it, the wait after the wait after Wednesday and Thursday 10:30, and then you can engage the market well. I'm greeting you once more from Suriname. This is a market review, daily review and analysis, what we'll be going to expect for tomorrow. And we have seen a nice trading day today. Normally what I will be doing is I will be using all these empty spaces. I might be doing that maybe later in the week or tomorrow, to write and to prime my mind, telling the market what I've seen in my analysis, writing, make some annotation, positive self-talk, pushing myself not to give up, and cheerlead myself on the empty spaces. Once more, this is the market maker, the markets with Odinga. I am the consistent, profitable, independent thinking trader, and with this algorithm that I am programming now with backtesting, journaling, and daily review and analysis as this tape reading sessions and trading, demo trade or live trade. I'm trying to program and work on the analysis in me, so that I can trade consistent the market. Goodbye, good trading.